Hello, beautiful people, and welcome back to Boni's Life, the channel where we make sense of the sense and sometimes the nonsense in the world of cryptocurrency. I'm your host, Boni, and today we're diving headfirst into a market that's been more volatile than a toddler on a sugar high. The past 24 hours have been a roller coaster to say the least, and we're here to unpack it all. We're talking about a historic record-breaking, mind-boggling $19 billion liquidation event. Yes, you heard that right. $19 billion wiped out. We're going to explore what caused this massive financial earthquake, who got caught in the tremors, and what it means for you, whether you're a seasoned trader or just crypto curious. We'll be doing a deep dive into the technicals, the fundamentals, and the global events that are pulling the strings off this market. We'll look at Bitcoin, Ethereum, and some of the altcoins that are making moves. And of course, we'll wrap it all up with a forecast for the next 24 hours and some strategies to help you navigate these choppy waters. So grab your coffee, buckle up, and let's get into it. This is one episode you don't want to miss. All right, let's start with the big picture. The global crypto market cap is currently sitting at around $3.85 trillion, which is down about 3.7% in the last 24 hours. The 24-hour trading volume is a hefty $242 billion. Now, these numbers might seem abstract, but to put it in perspective, the entire crypto market shed about $150 billion in value in a single day. That's more than the GDP of a small country gone in a flash. But the real headline, the one that had everyone's jaws on the floor, was the $19.16 billion liquidation event that happened on Friday, October 10th. This wasn't just a big number, it was the largest liquidation event in crypto history. We're talking about a financial tsunami that wiped out 1.6 million traders. To give you some context, this was 9 times larger than the crash we saw in February 2025 and a staggering 19 times larger than previous major liquidation events. It was a brutal, swift, and unforgiving market move. So, what is a liquidation? For those of you who are new to the game, a liquidation is when an exchange forcibly closes a trader's leverage position because they no longer have enough funds to cover their losses. It's like getting a margin call in the stock market, but on steroids, because in the 24/7 world of crypto, these things can happen in the blink of an eye. And when they happen on a massive scale, they create a domino effect, a cascade of forced selling that drives prices down even further and faster. It's a vicious cycle. And on Friday, we saw it play out in spectacular fashion. So, what lit the fuse on this powder keg? The trigger wasn't a black swan event from within the crypto space. It was old school geopolitics. On Friday, October 10th, US President Donald Trump announced a new aggressive round of 100% tariffs on Chinese imports and new export controls on software. The market, which was already flying high with Bitcoin hitting a new all-time high of over $126,000 just days earlier on October 6th, got spooked big time. This announcement triggered a massive risk of stampede. In simple terms, investors panicked and dumped what they perceived as risky assets. And right now, rightly or wrongly, crypto is at the top of that list for many. They fled to traditional safe havens like gold and silver, which both saw their prices soar to record highs. Meanwhile, the tech-heavy Nasdaq dropped nearly 3.6%, and the S&P 500 had its worst day since April. Crypto, being the volatile beast it is, got hit the hardest. Bitcoin plunged 15% from its highs, and some altcoins, as we'll discuss later, got absolutely decimated. To make matters worse, China didn't just sit back and take it. Beijing came out swinging, stating they are ready to fight to the end in this trade war and immediately retaliated with their own port fees and shipping restrictions. This escalation poured gasoline on the fire, confirming to the market that this wasn't just a threat, it was the start of a new, painful chapter in the US-China trade saga. The uncertainty this creates is poison for markets that thrive on stability and predictability. Now, let's get technical and look at the king of crypto, Bitcoin. As of this morning, October 14th, Bitcoin is trading at around $110,830. It's actually up about 3.7% in the last 24 hours, which shows some resilience. But the chart tells a dramatic story. After hitting that all-time high of over $126,000 on October 6th, we saw a brutal drop to a low of $104,600 during the Friday crash. That's a nearly 17% correction from the top. The good news is that the $104,600 level has held as strong support. We've bounced off it nicely, which is a bullish sign. This level is now the key line in the sand for the bulls. As long as we stay above it, the uptrend remains intact, albeit a bit shaken. The next level of support to watch is around the $108,000 to $109,000 zone, and below that, the major psychological level of $100,000. On the upside, we're facing immediate resistance at the $115,000 to $116,000 area. We've been rejected from there a couple of times already, so breaking through that will be crucial for the bulls to regain control. If we can clear that, the next major hurdle is the $120,000 to $122,000 region, and then of course the all-time high. What's really interesting is the derivatives data from CoinGlass. We're seeing a healthy deleveraging of the market. Open interest, which is the total number of outstanding futures contracts, is down about 3.5% to $72.66 billion. This is good. It means a lot of the risky, over-leveraged positions have been flushed out. At the same time, futures volume is up over 12% and options volume is up a massive 26%. This tells me that while some are getting liquidated, others are actively trading and hedging their positions, which is a sign of a maturing market. The long-short ratio is currently at 0.944, which means there are slightly more short positions than long positions. This is a bit of a contrarian indicator. When too many people are betting on the price going down, it can sometimes lead to a short squeeze, where a sudden price increase forces short sellers to buy back their positions, driving the price up even further. It's something to keep an eye on. Now, let's talk about the queen of crypto, Ethereum. ETH is currently trading around $3,943, and it's actually showing some impressive strength, up over 5% in the last 24 hours. During the crash, it dipped to around $3,800, but it has since bounced back with a vengeance, even briefly reclaiming the $4,000 level. This resilience is a testament to the strong fundamentals of the Ethereum network. We're seeing significant whale accumulation in Ethereum, which means the big players are buying up ETH at these prices. This is often a bullish sign, as it suggests that those with deep pockets are confident in the long-term prospects of the asset. The on-chain data shows that the number of addresses holding large amounts of ETH has been steadily increasing even during the recent dip. This, combined with the ongoing development on the network and the growth of the DeFi and NFT ecosystems, paints a very positive picture for Ethereum. Now, let's broaden our view to the wider altcoin market. The crash was a bloodbath for many altcoins, with some dropping as much as 80%. However, we're now seeing a clear divergence in the recovery. Quality projects with strong fundamentals are bouncing back, while the more speculative meme-driven coins are struggling to regain their footing. This is a classic flight to quality within the crypto space. 3 altcoins that are showing particular strength and are on my radar right now are Solana, SOL, XRP, and Cardano, ADA. Solana, despite being down about 1.5% in the last 24 hours, is attracting a lot of fresh capital. It's known for its high-speed, low-cost transactions, and it's a favorite among developers. XRP has been a monster. It recently saw the launch of futures contracts on the CME, and it became the fastest product in the platform's history to reach $1 billion in open interest. This is a massive vote of confidence from the institutional world, and Cardano has been a steady performer all year, outperforming even Bitcoin and Ethereum over the past 365 days. It has a very strong and dedicated community, and it's known for its methodical, research-driven approach to development. What we're seeing is not just a random recovery, but a smart recovery. The market is starting to differentiate between hype and substance, and this could be the early signs of the next altcoin rotation, where capital flows from Bitcoin into high-quality altcoins. It's a trend we'll be watching very closely. Now, it's not just me saying this. The big guns, the institutional players, and top analysts are also weighing in, and their perspective is fascinating. Let's start with the short term. The analyst Ash Crypto who, I might add, correctly predicted the crash to the $106,000 level, is now seeing a period of stabilization. The consensus among many analysts is that Bitcoin will likely trade in a range between $115,000 and $118,000 for a bit as the market digests the recent volatility. So, some sideways action might be on the menu. Looking at the medium term, say the next 12 months, the outlook gets even more bullish. Citigroup has put out a price target of $181,000 for Bitcoin. Their reasoning? They see Bitcoin increasingly fulfilling the role of digital gold, a hedge against inflation and geopolitical uncertainty. And they're not alone. The general Wall Street consensus is in the $133,000 to $220,000 range, all citing the massive inflows from Bitcoin ETFs and the growing participation of institutional investors. And the long-term picture? Well, that's where things get really exciting. Some of the more optimistic forecasts are calling for Bitcoin to reach as high as $750,000 by 2026. Now, that might sound crazy, but when you look at the data from the CME group, you can see the institutional appetite is real and growing. In the third quarter of 2025 alone, the combined crypto futures and options volume exceeded $900 billion. That's an all-time high. This isn't just retail speculation anymore. This is the financial establishment waking up to the power of this asset class. So, with all this information, the billion-dollar question, or in this case, the $19 billion question is, what happens next? What can we expect in the next 24 hours? First, all eyes are on Federal Reserve Chair Jerome Powell, who is scheduled to speak today. His words have the power to move markets, and everyone will be listening for any hints about future monetary policy. If he strikes a dovish tone, suggesting that the Fed might ease up on its tightening cycle, that could be bullish for risk assets like crypto. A hawkish tone, on the other hand, could send us back down. So, expect some volatility around his speech. From a technical perspective, the battle for Bitcoin is at the $115,000 resistance level. If we can break through and hold above it, I would expect a move towards the $118,000 to $120,000 range. This would be a very bullish signal and could trigger a new wave of buying. However, if we get rejected from $115,000 again, we could see a retest of the $108,000 support level. A break below that could open the door to a retest of the crash low at $104,600. So, what are the trading strategies here? For the bulls, a breakout and successful retest of $115,000 would be a good entry point for a long position, with a target of $120,000. For the bears, a rejection from $115,000 could be an opportunity to short, with a target of $108,000. As always, this is not financial advice, and you should always do your own research and manage your risk, but these are the key levels I'll be watching. For altcoins, I expect the flight to quality to continue. Look for strength in projects with strong fundamentals like Ethereum, Solana, XRP, and Cardano. If Bitcoin can hold its ground, we could see these altcoins outperform in the short term, but if Bitcoin takes another leg down, it will likely drag the entire market with it. So, as always, Bitcoin is the conductor of this orchestra. And that, my friends, is the state of the crypto union. It's been a wild ride, a week of historic highs and terrifying lows. We've seen the market flex its muscles, and we've seen it get knocked down by the heavy hands of geopolitics. But through it all, we've also seen resilience, recovery, and a growing maturity that is incredibly encouraging. So, what are the key takeaways? First, the macro environment is in the driver's seat. Don't ignore the headlines from Washington and Beijing. Second, leverage is a double-edged sword. It can amplify your gains, but it can also wipe you out in a heartbeat. Trade smart and don't overextend yourself. And third, in times of crisis, quality shines. The projects with real utility and strong communities are the ones that will survive and thrive in the long run. The crypto market is not for the faint of heart. It's a dynamic, ever-evolving space that will test your conviction and your courage. But for those who are willing to learn, to adapt, and to think critically, it remains the most exciting and opportunity-rich market on the planet. That's all the time we have for today. I hope this analysis has given you some clarity and confidence as you navigate the week ahead. What are your thoughts on the market? Do you think the bottom is in, or is there more pain to come? Let me know in the comments below. I read every single one. If you found this video helpful, do me a favor and smash that like button, subscribe to Boni's Life, and hit that notification bell so you never miss an update. Your support means the world to me and helps the channel grow. Stay safe, stay smart, and I'll see you in the next one.